Hey everybody, Rob Maurer here, and today we are going to be looking at Tesla's Q4 earnings report, shareholder letter, as those come out. Then we'll put the numbers in and compare those to my forecast, as well as analyst consensus. So we are recording this, obviously, live as the market closes. If you are joining afterward, just take a look at the timestamps to fast forward to when actually earnings come out. And for the rest of you, we're just going to hang out for a bit until that earnings report does get released. So while we do that, obviously Tesla stock doing okay right now, up about 1.5%. Looks like the NASDAQ is down about 0.5%. Yeah, down about 0.5% or so. And we did have, obviously, the Fed meeting today. So let's spend a few minutes talking about that as we wait for market to close and then Tesla to post their earnings report shortly afterward. So for those of you that haven't seen it, this is the statement from the Federal Reserve from their meeting. Obviously, the biggest thing that people are looking at is interest rates, other factors too, but that's what we'll focus on here. So a couple statements in here. In support of these goals, the committee decided to keep the target range for the federal funds rate at 0 to 1/4%. So no change to interest rates yet, but they did say that the committee expects it will soon be appropriate to raise the target range for the federal funds rate. So no rate change yet. It wasn't really expected, but anytime that you have confirmation of that, it's a little bit of a relief, at least in terms of the market. And then they're saying soon be appropriate, so that kind of sets the expectation to be a March interest rate raise, which will be the next time they meet. Then, so the market kind of spiked up on that, but afterward, the market fell really quickly. Tesla went red, NASDAQ went red, as Fed Chairman of the Federal Reserve, Jerome Powell, gave his talk and answered questions. So one key piece of that sort of started that downturn was he said, I think there's quite a bit of room to raise interest rates without threatening the labor market, which obviously that's one of the goals for the Federal Reserve, keep unemployment low and target a 2% inflation rate. So he's saying that quite a bit of room to raise rates and still do that. Obviously a lot of uncertainty around that. A lot of it depends in this Q&A session, but with his statement here saying that there's a possibility that more interest rates increases could occur this year than what the market previously expected. So remaining uncertainty, that caused a drop after sort of during that Q&A session. Looks like we're recovering a bit right now. But I think at any rate, people are glad to be through this event and at least see no interest rate increase yet, or at least market participants. I kind of like Gene's take here. So Gene Munster, Loop Ventures. His take on this is that the Fed missed an opportunity to set an appropriate and clear path of upcoming rate hikes. Disappointing for tech stocks that crave that clarity. So again, just even removing uncertainty can have a huge positive impact. And we're kind of left with uncertainty based on the statement today and some of those comments in the speech portion. So he's said to report that, expect the market will continue to be volatile until the next Fed meeting in March. Obviously, we've seen how that volatility can play out over these last few weeks as we've approached this Fed meeting. And then his last comment here, Chair Powell says he will give the market advance notice of upcoming changes to the Fed funds rate. The goal of this approach is to comfort the market. I believe this approach will have the opposite effect. Investors want clarity, not advance notice. And I tend to agree with that. I think the uncertainty is what causes volatility most of the time rather than actual changes to the interest rates, though those obviously do have an impact. But I think a lot of the comments today leaving a lot of uncertainty in terms of that path, which that's probably how the Fed feels, right? They're probably feeling uncertain too. A lot going on right now. A lot of things that they'll need to be fluid and flexible on. So there's also a reason from the Fed's perspective for them to not give all that much clarity at this point in time. So that's kind of the reaction to the Fed meeting. I'm glad that we're at least, doing okay right now as we approach market close here. And hopefully that'll let Tesla kind of, mark its own path as it reports earnings. All right, so we are, let's see, we're about 5 minutes now from market close. Let's take a look at the chat here, see what your guys' thoughts are. And then we'll start, refreshing furiously once the market closes. We'll probably see the shareholder letter come out 5 to 15 minutes after market close. So That's what I would expect. And then of course we'll also have the earnings call later today. That'll be on a separate live stream, and you can find the link for that in the description, or I think it'll just automatically redirect you after this one ends. Thank you, Samuel, for the super chat. Appreciate it. I'm going to flip over to Excel here and just take a look at what we're going to be filling in when we do actually get the shareholder letter here in a few minutes. So pretty similar to what we had walked through yesterday. Just changed the formatting here a little bit, and I need to update one thing there. But then we should be good to go. So once we get the actuals, we'll fill those in here, and we can see how those will compare with what I had forecasted versus as well as the analyst consensus. And it looks like I also need to update these year-over-year formulas, as those are currently referencing Q3. So you guys get to watch me do some Excelling here as I get that fixed. So let's see. Little tip for those of you that don't spend a ton of time in Excel, you can find and replace things in formulas. So I'll just go ahead and replace those. So now we're referencing, all these formulas are referencing the correct column there, but I need to get the correct column for last year. So also Excel on Mac is not as good. Don't let anyone tell you otherwise. And I do apologize, my voice is going to be a little bit scratchy today. Still getting over winter, I guess. Okay, so I guess I need to figure out what I need to replace here. So we got F, we need to replace with G. That'll mess up some of my other formulas, but we've got time. And I guess you guys can't see my formulas, but I've got some if formulas in here, and unfortunately, finding and replacing the F changes those. So hopefully I'll get these all corrected. I know this is pretty exciting for you guys all watching, but we'll get there. Market's closing soon. And we'll have more of this later too, if this is your style of entertainment. Once we get the actual numbers, we'll be putting those in too. So that'll take some time as well. I think I got most of these fixed. Those basis point change formulas are pretty complicated. Well, not that complicated, but easier than these percent change ones are. All right, I think we are all set there. Sorry about that. But again, we didn't really have anything else to do during this time other than chat amongst ourselves. So let's see. Super chat. Thank you, Oren. Appreciate that. I don't really have any idea what currency that is, but appreciate that, Daniel. We got 1 minute until market close now. Christian, thank you. Clapsco, serious question. Do you have currently have short hair or long hair and a ponytail tucked behind the hat? Ooh, it's a secret. Thank you, Jan. I'm just kidding. There's hair back there. You guys can see it. It's getting long. It might be reaching its end of days. We'll see. Thanks, Blaine. Love your beard as well. All right, let's hop back into Safari. Market is now closed. And let's begin our process of refreshing. So we got the Tesla Twitter feed up here. A feel like oftentimes I end up seeing the report posted first here. Otherwise, we've got investor relations page as well. And yeah, if you guys see it in the chat, just holler. Thank you, Philip. Again, usually it's about 5 minutes or so after market close when Tesla reports. So we'll be waiting a little bit here, just kind of refreshing and seeing what we can see. Hopefully nothing too ridiculous will pop up in the Twitter feed. Try to keep things safe for work here, but you never know. It's not looking like anything else or anything yet. Just kind of scrolling through the chat here. Thank you, Steve. Appreciate that. And what price are we at right now? 939. Let's refresh that. Get the after hours price up here. Looks like the NASDAQ did close green. That's nice to see. Up about 0.5% right now after hours. Not too much action yet. Sometimes the first indication that the report is out is a big spike here in after hours too. So we'll keep an eye on that. And again, I guess while we've hopefully got a couple minutes here, I'm going to flip back to Excel just really quickly and again go through my expectations, which of course we talked about in the episode yesterday. So if you're curious for more thoughts on why I forecasted what I did, you can go check that out. But top line, I'm expecting about 17.3 billion in revenue. That could be quite a bit higher if average selling prices beat my expectation, but I expect those to be a little bit lower because of Model Y standard range mix in China. Gross profit about 4.8 billion, operating income about 3.1 billion, 3.2. Net GAAP income about 2.6 billion, and then earnings per share of $2.68 or 2.28 on a GAAP basis. That's what I'm expecting, and that's what we'll see here in a few minutes. And let me flip back. See if we've got that report yet. Some people saying it's up. All right, here we go. I don't see it yet. Save me, Twitter. Are you guys just trolling me in the chat? I saw someone say hello, Rob, on Twitter. Send me the link on Twitter if you... I feel like you guys are just trolling me. Let me close those. You guys are? Why would you do that to me? That's so mean. I've lost faith in this audience. Well, we are getting some action though, up about 1% now. Hello. Yeah, still not seeing it. I can't believe you guys would mess with me like that. Disappointing. Oh, up 2% now. Something's happening. There we go. It's out. All right. Let's see what they did. All right. Oh, big margin beat, or sorry, big revenue beat from my expectations, but operating margin quite a bit lower. So let's figure out what's going on there. Seems like gross profit actually in line with my expectations despite the higher revenue. Automotive gross margin's good. Some of that being driven by regulatory credits. Strong EBITDA margin, but not quite where I was at. And then earnings per share. So $2.54 non-GAAP. So that did beat consensus expectation, which was $2.46. but fell a little bit short of what my estimates were, which is a little bit surprising to see given the beat on revenue. So we'll have to dig in here and kind of figure out what's going on. It looks like the stock is reacting okay, moderately, up about 1%, kind of the same level it was at before. Let's look at free cash flow, $2.8 billion in free cash flow. That's very exciting. Getting close to 18 billion, not accounting even for the Bitcoin there. So yeah, overall, I think this looks good. I am a little bit disappointed. It seems like the margin's a little bit lower than what I had thought. Operating income, so we must have higher operating expenses. Whew, yeah, okay. So that's the big difference here. I was at about 1.6 billion for operating expenses. Tesla came in at about 2.2 billion. So we're seeing huge increase here in OpEx. Let's head down to the bottom. Ooh, we got a lot of photos in this report. That's gonna be, ooh, look at those semis. All right, let's not get distracted yet. We'll come back to those. I want to find the operating expenses. So R&D came up and then SG&A came up quite a bit. I was at about 1 million there, or sorry, 1 billion. And that came up way, way high. Let's see if there is a, okay. So they almost recognized the entirety of the CEO compensation awards. So that was about $100 million over my expectation. Increase in SG&A driven mainly by $340 million payroll tax. Got it. Okay, so that's fine. So this is a one-time thing. This is actually probably even better than what I had expected then once we flush out some of these one-time items because there is this $340 million payroll tax, which obviously that's not going to happen in future quarters. Tesla did beat on revenue, and I think they're probably pretty close on my gross margin expectations too. So market's probably figuring that out. Nope, they are not. Down 3%. That's a mistake because this is looking really strong. So before we go and put those numbers in Excel, let's spend a little bit of time reading through here. But I feel really, really good about where this is at. I want to look at my X credits margin expectation. I think that's above or like right at where I was, 29.2%. And I was at 29.7%. Okay, so gross margin X credits was a little bit lower than where I was at, but still a strong number and still progress quarter over quarter, even though we did have some of those headwinds that I had talked about for Q4. So let's just read this first page here. Breakthrough year for Tesla. No longer any doubt about the viability and profitability of electric vehicles. Yeah, I would say so. Deliveries up 87% year over year. Highest quarterly operating margin among all volume OEMs by far. Showing that EVs can be more profitable than combustion engine vehicles. GAAP net income of $5.5 billion for the year, $5 billion of free cash flow, even after spending $6.5 billion to build out new factories. That's crazy. Our focus shifts to the future. We aim to increase our production as quickly as we can, not only through ramping production at new factories in Austin and Berlin, but also by maximizing output from our established factories in Fremont and Shanghai. We believe competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. FSD software remains one of our primary areas of focus. Over time, our software-related profit should accelerate our overall profitability. Excellent. More importantly, FSD is a key component to improve automobile safety, as well as further accelerating the world's transition to sustainable energy through higher utilization of our vehicles. Fun fact, that's what we talked about a lot during our impact report coverage. While 2021 was a defining year for our company, we believe we're just at the very early stages of our journey. Thank you for being a part of it. Awesome. Well said, and totally agree. Financial summary, we've talked about quite a few of those things. Cash, operational summary, deliveries. Oh, that's production. Okay. Yep. Deliveries came in a little bit higher there. As you can see, as we talked about previously, 4 days of inventory. Just crazy to end the year with that. Okay, let's look at storage. Oh man. Oh, that's annual. Okay. So energy was a little bit lower, about 1,000, almost a gigawatt hour. A little bit lower than my expectations and a little bit down quarter over quarter. This vehicle capacity chart is always interesting to look at, but it doesn't look like any changes there. As you can tell by the Shanghai being greater than 450,000, even though they did, like 180,000 there last quarter, which is like which is like 720,000 annually. So let's see. What do they have to say about Texas here? Q4, we saw a continuation of global supply chain, transportation, labor, and other manufacturing challenges, limiting our ability to run our factories at full capacity. Even though they did 300,000 plus production, still had challenges. Builds of Model Y started in late 2021 at Gigafactory Texas. After final certification of Austin-made Model Y, we plan to start deliveries to customers. Fremont overachieved. Believe there's potential to extend overall capacity beyond 600,000 per year. So that's what Zach had previously said, a 50% increase off the 430,000 run rate that they were at. I think he said that on the Q3 call. Continuing to ramp up Shanghai. Berlin, equipment testing through the vehicle production process started late 2021. We are still in the process of finalizing the manufacturing permit from local authorities, which will allow us to start delivering German-made vehicles in Europe. These first vehicles will be built using 2170 cells, which, interesting, as expected. We thought Germany 2170s, Texas 4680s, and they did not specify 4680s they did not specify 2170s for Texas. So by omission, you can assume that is indeed going to be 4680s. Market share continuing to grow. This is the right way to look at it, not as a percent of EVs. Vehicle delivery growth. So this is percentage growth. You can see everyone flatlining, Tesla continuing to post strong growth. And then operating margins continuing to shoot through the roof. This is trailing 12 month. So this includes Q1 and Q2 last year, which were quite low relative to where Tesla's at. Just the last 6 months, they'd actually be off of this chart. So it'll be fun to see that in a couple of quarters. At FSD, we successfully increased the number of FSD beta vehicles from a couple thousand in Q3 to nearly 60,000 vehicles in the US today. So this is way higher than I was thinking. I was thinking maybe 30,000 vehicles or so. So a lot of cars out there with FSD beta, and we continue to not hear, anything about any crashes. There have been a couple of, close calls and situations like that, but with 60,000 vehicles driving around, you're going to have stuff like that. So I think this is validating Tesla's strategy of having released the FSD beta, that there haven't been any, huge concerns over a pretty decent chunk of time now. Q4 released a new interface, live view, okay. Manufacturing, EVs were often deemed structurally unprofitable. Cost per vehicle dropped to about 36,000 both Q3 and Q4. Okay. We believe our current projects, including large casting structural battery, 4680 cells, and many others. Those would be the ones we normally talk about, but many others should help us continue to minimize our product cost. That's great. Energy storage up 32% year over year. This is actually quite a bit lower than what they had expected for the year. If you could look back to last year's Q4 report, Tesla grew at 83% compound or 83% annual growth there from 2019 to 2020. And they said they expect similar growth for 2021. So 32%, quite a bit lower. But I'm sure it has to do with, what Tesla set up here, that they had these supply chain challenges. I'm sure that held back energy pretty significantly. So hopefully we can see that growth rate spike up for 2022. Solar, okay, so we're seeing a bit of an increase there. No surprise based on the previous quarters. All right, and then outlook. So we probably should have looked at this earlier on, but we plan to grow our manufacturing capacity as quickly as possible. Multi-year time horizon, 50%. Growth rate will depend on equipment capacity. Our own factories have been running below capacity for several quarters as supply chain became the main limiting factor, which is likely to continue through 2022. Okay, so like we talked about in the preview episode, Tesla not giving any specific guidance here about 2022. For Q4's report last year, they did say they expect 2021 to be a higher than 50% year. They're not explicitly stating that here. I would imagine that is their expectation just based on what their capacity is. But that is a bit of an omission here in this Q4 report. Not entirely unexpected, but still, I think, noteworthy. All right, so we're down 4.20%. All right, cash, nothing too surprising there. Sufficient liquidity, continue to execute on innovations to reduce the cost of manufacturing. Acceleration software products, okay, stuff we've talked about. Product the pace of production ramps in Austin and Berlin will be influenced by the successful introduction of many new product and manufacturing technologies in new locations, ongoing supply chain related challenges, and regional permitting. We are making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y. All right, let's take a look at these photos. Fremont factory, record production 2021. Some of the beautiful art that they've got at Giga Berlin. Quality control in Berlin. Berlin Body Shop. Berlin General Assembly. Obviously, they're ready to go once they get that permit. Giga Texas exterior. I'm sure we've all seen many shots of that via drones. General Assembly there in Texas. That runs deep back there. Paint shop. Attaching seats to the structural battery pack. So exactly what we've seen at that Giga Berlin GigaFest. Tesla actually building those there. Shanghai exterior. Shanghai General Assembly. And then the semi as we looked at before. But really beautiful shot there with the mountains and everything. I don't think they gave us any specific update on the semi. Hopefully we'll hear that on the product roadmap update. Cumulative profitability. Oh, Tesla is now moved into lifetime profitability, it looks like. Retained earnings, accumulated deficit. Sweet. So after losing money for 17 years, all of a sudden you have one good year and you flip back into being a net earning business, as long as I'm understanding that chart correctly. We'll skip over some of these charts. I've got some of my charts to do as well. All right, cool. So I think that's everything in the letter. Let's go ahead and put some of this into Excel, and I think that'll help me get a little bit better of understanding of the strength of these numbers. I really think right now we're going down. Recovery there. I think the initial reaction is down just due to the little bit lower here. Obviously a beat to consensus, but as I mentioned, the whisper number seemed like it was more around 270. So I think that's probably what's dropping that down. But you've got basically almost that entire miss as a result of the tax from Elon selling. So not anything that's going to sustain going forward. All right, so I'm going to flip over to Excel. I'm going to have both windows open here on my own screen just so I can put these numbers in. Let's see. And we'll take a look at how this all compares. And then again, we have the conference call coming up in about an hour and 15 minutes. That'll be on a different live stream. It should take you there right after we wrap this up, or the link is down in the description. That'll be very interesting to hear this product roadmap update. No Cybertruck photos in the report. Kind of interesting not to see that. All right, just bear with me as I get these numbers. All right, so no surprise, obviously, on the on the delivery number. Yeah, so you can see here as I'm filling this out, I was 4% below automotive sales. And my total revenue is actually going to end up being even closer than it probably should have been because I was way over on energy. And of the two, I'd rather have the beat in automotive because it means, because it means the average selling prices are stronger than what I'd forecast, which is going to be more beneficial for future quarters, which again, that's why we look at all this stuff in such detail, is to understand where things are actually going to go from here, not just did Tesla make a few more cents per share this quarter than expected. Okay, so off on 3% on revenues, pretty similar to the analyst there. Let's take a look don't look at those profit numbers yet. Those are needing the costs associated with them to be added, which I'm doing now. So energy's flipping back to a loss there. Did service break in positive? It did. There we go. Services and others for the first time ever. Breaking into positive gross margin, although now being offset by energy. So those two businesses combined losing $35 million. But nice to see services finally break positive. All right, R&D, we've got 740, so I don't mind those R&D costs, but higher than I'd forecast. I was 16% below the actual there. And then the big one, SG&A. That's the biggest miss in this entire forecast, aside from the revenue from the higher ASPs, which we did mention obviously as a possibility. So I was 33% below that, below the actual there. Bitcoin, no impairment as expected. Just make sure that all lines up here. All right, total operating expenses, 2234, operating income, yep, 14.7. So definitely off on the operating margins here, but just for example, if we were to take out that 340 million of the SG&A, we'd be much closer. Still not quite there, but much closer. And a lot of that would be due to the revenue and slightly lower automotive gross margins, which you can see here as 50 basis points too high. But gets you close to getting back to my operating margin, about halfway there, just from that one-time tax expense. Let me take that back out. And then EBITDA, that's going to be pretty similar story there. Still above 4 billion, more than double last year, 120% year over year. Stock-based compensation. Oh, okay. I saw a negative number there at first and I was quite confused, but that was just the wrong line. So 558 million. So that's higher than my forecast, but again, that's because they did about 100 million more with CEO comp than I expected, which we'll add in here now. So 245 million. So there should only be about $50 million left, which is going to make 2022 a really clean year for SG&A. And you can see that it should be down. So we had $910 million in CEO compensation accounted for the last 12 months, so 2021. And then for 2022, unless there's a new plan that Elon starts hitting milestones for right away, which is unlikely, then that's going to go down $850 million, which adds straight into GAAP net income, which let's get that and we can see what that would have done to this year. Okay, so GAAP net income. $23.21 and $254, $205. Free cash flow, last one. And it looks like they didn't do anything with that deferred tax allowance, so I'd imagine we'll probably see that in 2022 as well. Plus all that deferred FSD revenue as they now get pretty close to wide release of FSD. And I guess not pretty close, but definitely closer with those 60,000 vehicles with the beta. All right, so let's just recap these now that we've gone through this. I'll zoom in a little bit here. I know it's probably a little bit tough to see for some. Let me freeze panes here. And then we do have some charts to look at, and then we'll wrap this up and head into the earnings call. Okay, so automotive sales are up 70%, total sales up 65% year over year, with deliveries up 71%. So Yeah, and these are just Q4. But it looks like the average selling price then actually constant to last Q4, which is kind of interesting. Automotive gross margin. So again, that's one of the first places I look. It's been a little bit choppy in this stream, but a little bit lower than my expectations, but still up for 40 basis points quarter over quarter. I think the average selling price is going to end up being up quarter over quarter as well, which I'll have to go into my more detailed forecast for that. So we'll talk about that in a future episode, but I think the average selling price is increasing, which hopefully a good sign for vehicle mix and demand as sort of a follow-on to that, particularly in China. So that did drive my gross margin, or Tesla's gross margin, a little bit below where I'd expected, which again is carrying through, plus the higher operating expenses there, which I expect to drop down next quarter to maybe 1.8 billion or so, maybe 1.9. Yeah, and then GAAP net income. So for the year, let's see what the PE would be right now. So 490. Let's take a look at the stock. I'm not sure where we're at right now. Down 2.5%. So the price to earnings, next time you look at it, next time it's updated, or I suppose. So 915 divided by 490. So Tesla's current PE is 187. And then if you annualize Q4, which again should be conservative, you're going to have 810. So 915 divided by 810. The PE based on Q4 annualized would be 113 times. So we're getting down there. The compression continuing to happen as expected. And again, look at this GAAP net income for this year, 5.5 billion. And it would have been, had you not had all of the CEO compensation happening to hit this year, it would have been $910 million higher. So 910, let's say 55 of that happens this year. So it would have been, as we think about heading into 2022, naturally just not having this expense is going to add $800 million to Tesla's number here. So then you'd be at, 6.3 billion, which would have increased the GAAP net income this year by about 15%. So, you take your 490 that we have in trailing 12 months earnings per share times 1.15. Really, the earnings should be more like 564. And then really the price to earnings should be more like 162 times right now. We also had outsized interest expenses this year too, which Tesla's paid off a lot of debt, so that's not going to carry forward either. Plus you had that $340 million tax charge. There's so many things here you can just go through and list. Plus you have a bunch of deferred revenue from FSD. This is what people don't get about Tesla. And I don't even know how many people are listening to the stream anymore. I can't see it, but people just don't understand how many things are in Tesla's financials that are kind of suppressing them and making them look not that great right now, even though they still look great. They're not as good as they should look because of some of these, not one-time things, but some of these factors that just suppressed earnings throughout this year. Like you sit here and we've already got 3 of those. So you've got 850 million from CEO compensation. You probably got 100 million from extra income expense that they won't have next year. You've got 340 million here from Elon selling stock, which count it if you want, but it's not going to carry forward every quarter. You're already at $1.3 billion there. And that's just this one quarter. Remember, in part of these trailing 12 month numbers, you've also got, I guess part of that was, total year. But if you go back to Q1 and Q2, you also had the Model S and X refresh costs hitting to an outsized degree. I think that was a couple $100 million. So throughout the year, there's just all these things that, call them one time or not, they suppressed this number that we saw this year. So in reality, Tesla's more like a 150x PE stock right now, and actually probably even lower based on what the fundamental business itself is doing. So that's why it's important to go through these things in this level of detail, understand, what's going on. Okay, charts. Let's look at those. It'll take a second to load here. I've got them over here somewhere. Let me unfreeze these panes. Okay, back to where we were. right. So obviously no surprise here. Deliveries ramping up, revenue ramping up, regulatory credits as a percent of that revenue going down. As you can see on this chart, this is the last 5 months or 6 months, or sorry, 6 quarters. That's mislabeled. I don't know why, but that would be, yeah. That is this quarter. Energy sales, kind of disappointing to look at. Pretty flat over the last 5 quarters. We'll see if that changes. I do expect that to increase pretty significantly throughout 2022. Service and other sales, slow increase there. Total sales, really nice increase. Automotive profit, so very nice increase there. And again, regulatory credits continuing to be just a smaller and smaller chunk of that. Energy and services, energy/service and other profit. Finally seeing that nice service and other profit. Energy, not so much. And total gross profit following again that same really nice curve. Automotive gross margin, so we did see that, stop growing as quickly. But again, I think a lot of that is associated with these Q4 costs that I was talking about, whether it's logistics, parts, supply. Q4, it just kind of carries, a lot of challenges. So that's that. Automotive gross margin X credits, a little bit better of an increase there. And total gross margin, kind of the same thing. So we should probably expect this to kind of taper off as we ramp up Berlin and Texas. And it might even drop a little bit. But as Tesla gets these things figured out, we're going to see the strength of the business return. And operating margin, this gives us a really good look at kind of what I was talking about with Q3 being a really clean quarter. Q4, there were more of these one-time things that is really suppressing this natural curve that we were starting to see develop for kind of a lot of these things, I think, but especially for operating margin with those extra operating expenses. You would have seen this grow to 16.5% without that Elon tax thing. So it would have continued following that curve really nicely without that. So again, I would expect that curve to continue on with the exception of the ramp up costs. Total sales and operating expenses, gross profits, and then earnings per share. No surprise on those. Okay. Let's see. Let's see what the stock's doing here. And then we'll call it quits for today. Hopefully I'm sure I missed some cheaper chats, but hopefully not too bad. And again, sorry for my voice, guys. I know it's a little bit scratchy today. So again, if you're just tuning in, you can go back and I'll add timestamps to this for when things are coming out. All right. I do apologize. I'm sure I missed some super chats in here, but I do appreciate those. I'll try to come back to those when I do have a little bit more time to look through this. And like I did before, just put some replies in the comments. So check for that. Check for the timestamps. And again, the link is in the description for the earnings call. I'll do the same style, just sort of like the live blog situation with reaction post earnings call and product roadmap update as well. So as always, thanks for listening. Make sure you are subscribed and sign up for notifications. You can find me on Twitter @TeslaPodcast, and we'll see you for the earnings call in about an hour from now or so. Thank you.